Welcome to Business Talk here on businesstech.co.za. Today we're discussing a topic that's as important, I think, as it is under-discussed: life insurance. It's that thing we all know we should have, but often avoid, like kale smoothies. Great for you, but rarely enticing. So joining us is David Jewell, who's head of SA Retail Life and Savings at Liberty, a man who's dedicated his career to ensuring South Africans are better prepared for the financial curveballs that life throws at us. And life does throw curveballs. Now, with nearly 3 decades of industry experience, including a stint as Chief Risk Officer, David certainly isn't a stranger to analyzing and mitigating risk, whether it's on a spreadsheet or in our everyday lives. So today we're going to unpack some startling statistics. Only 1 in 10 South Africans has life insurance beyond funeral cover. And if that doesn't make you pause, here's another one. The life insurance shortfall in South Africa sits at a jaw-dropping 34.7 trillion rand. That's trillion with a T. So what does that mean for families, for the broader South African economy, and for a country already grappling with multiple challenges? So stick around, because David's here to shed light on all of that. David, great to have you on the show. That figure I pulled was from the 2019 Insurance Gap Report by CISA, 34.7 trillion rand. What are the societal and economic implications of such a significant gap for South Africa?
So first up, Michael, thanks very much for having me on the show. Great to be here with you and talking about this really important topic this afternoon. I mean, that insurance gap has remained stubbornly high and actually grows every time the study is reperformed. I mean, it's obviously a huge number. I mean, something that kind of certainly goes beyond any numbers I can comprehend. Importantly, I mean, it's an assessment of the shortfall that South Africans have with respect to life insurance, disability cover, and critical illness protection. Roughly half of it is life insurance, and I mean, it's essentially a measure of the financial resources that households would need to maintain their standard of living after a loss, versus what is actually available through existing insurance cover and to some extent existing assets. And I mean, the reason that it's so big, I mean, the primary reason is that your future income is your most valuable asset. And obviously, if something happens to the breadwinner in a household, I mean, either the death of the breadwinner or their inability to work due to disability, or whether that's permanent or temporary, or the need to, for example, focus on treatments and lifestyle adjustments following diagnosis of critical illness, I mean, that income is no longer available, and obviously the entire household then suffers the consequences. And obviously, it's not just about you, the breadwinner; it's about that whole household and the entire ecosystem that you support. And so as a result, many South Africans are very, very vulnerable. And run the risk of moving backwards rather than progressing economically over time, and building from one generation to the next.
It's so important when we talk.
Sorry, Michael, go for it.
No, I was just going to say, it's so important when we talk in South Africa about financial inclusion, about doing away with the legacies of apartheid, that we have this conversation, because as you said, it builds that resilience, that you're not going backwards when life's little shocks happen. And I think in South Africa, far too often we see individuals with maybe 10 funeral policies, and we're willing to splurge when we're gone, but we're not thinking about what happens to those we leave behind. So I'm really pleased to see that Liberty is taking the lead in having this conversation.
Yeah, look, I mean, absolutely. And I mean, one of the primary drivers of the gap is affordability. I mean, our society, we have high poverty levels. I mean, there are limits on what people can afford to put in place. And then there's significant barriers to actually getting the appropriate cover in place, from financial literacy education, lack of awareness about how to actually go about putting in insurance in place, access to the appropriate advice that you need to better understand what your needs are and take the necessary action. And the dynamic that you call out, where there's a lot of provision through funeral cover, I think is a function of the fact that it's typically very easy to acquire funeral policies, but it's not necessarily the best way to actually get the cover that you need, and it's certainly not the cheapest way.
Yeah, with my personal experience, my partner suffered a stroke about 7 years ago, cerebral venous sinus thrombosis at work. Super fit, running 10K weekend, kind of, I wouldn't call them marathons, but they're those competitive races that we see around the country, and completely like a bolt out of the blue. Very fortunately, though, her broker had her with, interestingly, a Liberty policy, and it paid out her income and her retirement annuity, and continues to do so, in fact, because through rehabilitation, she was declared to not be able to return to work. Now, I shudder to think what would have happened had that policy not been in place. So I just think it is such an important component of any good financial plan. So what practical steps can consumers take to protect themselves, protect their families, and address this gap?
So, I mean, for me, the journey always starts with, I mean, firstly, you need a level of awareness of what you're exposed to. So I think as an industry, you've got a lot more to do in terms of actually just educating consumers around the risks that they're exposed to. And then what's critical is that you get financial advice. I think we typically, kind of see financial advice as all of the technicals, deep expertise around things like financial planning, the process, what the various products are, risk tolerance, estate planning, tax, and all the rest. And obviously, those all play a key role. They're all part of the mix. And particularly as your needs become more sophisticated, an increasingly important part of what financial advice is about. But for the vast majority of consumers, they're not talking really complex estate planning. The critical role that advisors play is helping consumers understand what their needs are. There's no way you're going to make provision for something like what you've just referenced if you don't actually understand that that's an exposure that you have. Once you've done that, then actually take the action that you need to take to do something about it. And I always say, insurance is not something we wake up on a Saturday morning kind of thinking, hey, I need to go head out this morning and go and get me some life insurance. It's just not like that. And then thirdly, once you've taken action, once you've put in place cover, actually sustaining the journey. And it's difficult because you're giving up consumption in the moment for the peace of mind that you provided for life's eventualities, and that's not an easy thing to do. And in that regard, most consumers aren't able to put in place all of the cover that they need up front. So it's typically a question of kind of building a full portfolio of protection as you progress through your life journey.
Yeah, and typically, if you look at a life stage model of earnings, your earnings will eventually reach a point where you can afford that without it impacting your lifestyle that significantly. But you've got to start and build that muscle, build the habit, build the development as early as possible. My issue, and I think we've got an advice gap, because I think there are many who are in desperate need of this advice. But for the advisors, to go out and service 1,000 clients just isn't possible. So you tend to focus on the higher income earners. So how do we increase life insurance penetration in South Africa if those just are the economic realities?
Look, and it's a tough challenge. Again, I think it starts with broader financial education. If there's clear demand, if consumers are actually driving to get the cover that they need in place, it's easier for us to then provide to their needs. But sadly, looking around the world, you'll find there's very, very low levels of penetration of direct insurance provision. So even in kind of highly digital, sophisticated markets like Singapore and Hong Kong, you're just not going to find more than kind of 5%. That's directly driven by the customer. And so we are still heavily reliant on physical distribution platforms that typically involve some sort of advisor operating human to human with the client. I mean, to my mind, the types of things that we've got to keep working on as an industry is making the products themselves more and more affordable. And I mean, in order to do that, we have to drive down the costs of manufacture. Obviously, increasingly, I mean, by smart use of technology, I mean, we can do that. We're well underway to do that. And then critically, the cost of distribution is a big part of the total costs that we incur. And so leveraging existing distribution platforms, I think, is key. And again, you can see if you look at the funeral market, for example, I mean, the banks are making significant inroads into distribution of funeral products off the back of the branch infrastructure that they have and the existing digital capabilities that they have in consumers' hands, in their phones, typically an app or something like that. And obviously, as part of the Standard Bank Group, I mean, that's certainly a place that we are playing. And then, I mean, over and above that, I think, I mean, if we go back to financial education, for example, I mean, it's one thing educating consumers on what they need, but actually helping them take the steps to make sure that they've got room in their wallets to buy insurance cover is critical. So I mean, properly understanding budgeting, so that you better manage your finances, and then, for example, debt management consolidation is critical. I mean, if I can reduce your cost of debt, I mean, it does open some room to actually put you in a position to be able to pay for the insurance that you need.
Yeah, it's got to be that kind of holistic approach that you've just articulated. But I also think a lot of it does come down to the education, and that really is about the storytelling and, you know, culturally understanding what makes particular demographics tick. And the fact is, if you can penetrate with funeral policies, I know they are lower cost, but you know there is a messaging that one could tap into around the importance of life insurance and what happens to those we leave behind when we become the ancestors, so to speak. But when we talk in the South African context, what are the benefits of high life insurance penetration for economies broadly that we really should be driving as a message? There's the new government of national unity. Everyone wants to drive growth. Surely this has got to be a key underpin of growing economies.
Yeah. I mean, so, I mean, a few points to mention here. Really, first off, I'd say financial resilience. So high insurance penetration levels create a safety net for families, helping them cope with shocks in the system. I mean, this obviously then reduces dependence on government supports, enables households to actually maintain their consumption, their spending levels, which is obviously good for the economy and the general stability. Second thing I'd say is that it's critical to what I describe as societal progression. I mean, particularly if we look at middle markets customers, one of their primary concerns is backsliding. And so if you look at a family group, I mean, very often they've invested heavily over an extended period of time in the education of a family member, and they now become dependent on that family member to generate an income for that family group. And so having in place life insurance protection, I mean, that's not just about providing a funeral and the burial, but actually about protecting that asset, so to speak, of the household becomes really, really important. And that's what enables the next generation to start off from a better place than where the previous generation ended, rather than needing to start from scratch again. So I mean, I think hope for the future used to die with the breadwinner and his or her income. Going forwards, and with the right life insurance cover in place, it doesn't have to anymore. It is possible for generations to build on each other. I mean, importantly, I mean, you can imagine how having the right life cover in place provides, I mean, despite the fact that, I mean, it's a moment of great human vulnerability. I mean, the things that we deal with, the types of events we're talking about, I mean, are not the kinds of things that people want to typically engage in. But I mean, it provides actually more than an income, because it's providing a capital injection at a critical time. and often frees up that family to free itself from debt or potentially start a business, or secure some other form of stable income to replace what has been lost. I mean, I think onto the next point, obviously from a governmental perspective, I mean, it reduces the burden on public welfare. I mean, I think our kind of swelling of social grants and the likes, I mean, is well documented, is an increasing burden on the state to the extent that consumers provide for themselves. I mean, we don't need to keep heading down that path. And then over and above that, I mean, obviously the life insurance industry builds up a savings pool, which becomes an engine of future growth because, I mean, we are pooling risks, accumulating assets, both to back those life insurance risks and from recurring savings vehicles to ensure that we can meet promises made to customers. And these asset pools, I mean, can then be invested in infrastructure and capital markets, drive the depth and liquidity of those markets, which are an engine of economic growth across the economy. I mean, I guess it goes without saying that an industry such as life insurance provides a whole lot of employment and makes a contribution to the fiscus.
Yeah, and Professor Adrian Sabel often talks about countries that grow and the need for having that depth of savings. It is one of the key characteristics of those high growth economies that we've seen in the Asian tigers and beyond. What are you seeing in the attitudes in terms of, you know, what you just articulated about, particularly in the black middle class? You've invested often maybe in a child who's the first to have gone to university because of the pernicious history of apartheid, and now you know you want to solidify all of that effort that you put in. Are we seeing attitudes change and be receptive to this message, or is it something that we still need to do a lot of work on as an industry in South Africa?
Michael, I think there's still a hell of a lot of work to do, but I mean, we certainly are seeing moves. I mean, but it's slow. I mean, I think it's still early days. I think we're still in a place where, I mean, the primary provision is through funeral policies and often multiple funeral policies, which is something that I think we can address as an industry. I mean, it's actually, I mean, while there's a perception that funeral cover is cheap, the reality is per rand of cover, I mean, you're paying a lot more for funeral cover than you would be paying for life insurance. I mean, if you are more extensively underwritten. And so, I mean, it's generally worth your while to go through the sometimes uncomfortable process of being underwritten, filling out the forms and having the blood tests and all the rest done to get the benefit of actually paying a much lower unit rate for the cover that you need. And what you're seeing is the industry, I mean, innovating in that space, developing products that are still relatively easy to acquire, but are coming at better prices because there's some form of limited underwriting. And again, I mean, by virtue of, I mean, us now being the life insurance manufacturer within the Standard Bank Group, I mean, we've now, for example, built a product that enables consumers to take out R500,000 worth of cover without actually needing to undergo any form of underwriting other than filling out 3 questions. So you can, within five minutes, I mean, actually have some level of life cover protection in place. And if you prepare to spend more time answering the questions, perhaps going for a couple of medical tests, you can get significantly more cover than that. So I think we need the solutions. We need to be there. We need them to be widely available. We need them to be easily accessible. And then it's back to making sure that consumers understand what their needs are. I think the fear, if I can put it like that, in the middle market is this notion of backsliding. I mean, I mean, it's certainly a market opportunity. I think the market is ready for it. I think it's receptive. It's a question of us actually leaning into that challenge and making the product available where the consumers are. So
yeah, and I think businesses have a role to play as well. When we moved from the DB to the DC system, it seemed like we moved from an overly paternalistic to a kind of, Wild West, you're on your own, let's sever the umbilical cord altogether. And we need to have this conversation as a broader conversation around employee benefits, to say, in an environment where you want to attract the best and the brightest, how are you as a company also incorporating this into your EB schemes to attract and retain the best talent in what is a very competitive market? Yes, we have high unemployment, but if you've got the right skills, it is still a very competitive market. What role do you see for corporate South Africa to play in helping increase this penetration rate in South Africa?
So I think as you've referenced, I mean, actually building employee value propositions, I mean, that meet the wider needs. I guess for employers, the key consideration is the cost of what they're putting in place. And I mean, many folks entering the workplace today, I mean, would typically rather just kind of pay my salary and I'll sort things out myself. So I mean, I think there are constraints on what employers can do, but I mean, it's certainly in their interests to make sure that their employees are adequately provided for. And it's that trend that you call out, away from sort of the more paternalistic approach to something more akin to the Wild West, where employees need to look after themselves. And so, I mean, we certainly see opportunities in models where employers provide some level of basic cover and then actually open their doors to providers like ourselves, allow us into their work sites, into the place of work, so that we're able to bring our financial literacy resources, deploy advisors, meet customers at their place of work, to build on the basic employee benefits that have been provided, to try and strike that balance between some provision in place with the opportunity to get all of the cover you need and meet all of your needs, be they savings or life insurance related, without compelling a one-size-fits-all to all of the employees. So, I mean, that certainly I see as a vector of growth and a vehicle to use to better meet the needs of South Africans.
Yeah, and it does boil down to getting good advice. I talk about this on my various platforms day in, day out, have been for decades. I have an advisor because I find that advisor helps keep me disciplined, but it's their day job. They're certified financial professionals, so they've got the designation. They understand the tax ins and outs, and as you grow with them, they understand you. You develop a relationship with them. What initiatives are you leading to educate consumers about the importance of life insurance, but also the importance to access sound financial advice? Because it really has a positive influence ultimately on our behavior and in closing that insurance gap.
Yeah. So, I mean, we have quite a significant financial literacy education program, and which starts with the basics of, as I said, I mean, things like budgeting, things like debt management, and then it progresses into topics such as saving for your retirement, the importance of managing your tax affairs appropriately, getting the right life insurance cover and so forth in place, leading into a conversation around the importance of actually getting the right advice. And exactly as you're calling out, I mean, for me, that starts with making sure you actually understand what your needs are and then getting you to do something about it. I mean, it's a really important part of what a good advisor does. And once you've done it, stay the course. I mean, and a good advisor is an expert in a number of different, very complex areas. But I actually think those three things: understand your needs, take action, stay the course. I mean, for me, are the most important things that advisors do, and but they can only do that if they can build a relationship of trust with the client. I mean, so for example, when you're interacting with your advisor, I mean, you probably walked a fairly long journey already with that advisor. You built that trust relationship. And that is part of what kind of keeps you going. I mean, it's a bit like a it's a bit like a personal trainer. I mean, if you're trying to get fit, and I mean, you know, there's somebody waiting for you, and they're going to be there, and they're going to be checking that you're holding the right form when you're doing your push-ups. I mean, you sort of step up, you raise the bar, you do what you need to do, and I mean, so it almost turns into more of a coaching relationship, and that for me is what really good financial advisors do over the long term, walking life journeys with people.
Absolutely. Well, David, thank you very much for joining us today and for breaking down a topic that I think, while it can be complex and maybe a bit aloof, as you say, we don't roll out of bed looking to go buy life insurance. It touches every one of our lives. As the saying goes, prepare for the worst, but hope for the best. So we really do hope that more South Africans will start considering this as more than just a financial product. It's a lifeline for families and a cornerstone for economic resilience. So thanks so much for your time.
Thank you very much for having me on the show.